Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Edge video, the weekend edition, where I share some of the best trading opportunities on my radar for the week ahead. If you guys are brand new, thank you for checking out the channel. I am a Forex trader, trading coach, co-founder of Tier1Trading.com, and also the host of the Trading Coach podcast. Now, I am in a fantastic mood, not only because I have a lot on my radar to share with you today, but also because I just got some very good news, right? I was speaking to a trader this Friday, a former client of ours who was just keeping me updated on his journey and everything he's been doing. And he told me that he just passed the verification period for a challenge he was working on. Basically, he was working on getting funded by a prop firm. He finally passed the verification period, and he's going to be able to trade 100K of their money, which is awesome. And of course, looking forward, as most of our clients and former clients do, he's looking forward to be able to continue those results and manage 300K before the end of the year. And that is just awesome, because that is the ultimate goal of what we're doing here at Tier 1 Trading. Now, before you guys say it, yes, I coach. Yes, I get paid to coach. No, I would not invest this much time and energy into the traders that we work with if I were not getting paid. I do kind of just what I'm doing on YouTube or Twitter. I'd still give hints, but it wouldn't be that time investment. It is a business after all. But one of the reasons that I decided to get into coaching instead of just managing money and trading for myself, obviously, is because I want to make a difference. And you know, trading was a big part in my life. It basically enabled me to create my perfect life, where before I was working 3 jobs. I was working in the school district with kids that had mental and behavioral health issues. I was coaching track and field, and I was cleaning toilets at night, and that wasn't the ideal lifestyle for me. So trading was something that got me out of that and gave me freedom of money, freedom of time, really just complete financial control. So it's very important to me that I give back, and my way of giving back is taking people that are like me in the situation I was in at the time, and they're trying to make a difference and make a change in their life, whether it's a drastic one or just a minimal one. And you know, being a part of that process is big to me, and it kind of makes my heart smile, and it kind of reinforces that not only are we doing things the right way from a teaching perspective, but you know, we're doing things the right way from, you know, what we've kind of dedicated our life to. So that's pretty cool. Okay, not to get too mushy-gushy on you guys, let's hop into the charts. A lot on the radar today, so we're gonna be not as detailed as usual, but I want to give you some bigger picture looks at what levels to, or I guess what directions to predict and what levels you expect those moves to play out to. All right, so we're gonna start out here on the euro dollar. We're gonna start on the weekly charts. We're gonna do a lot of weekly chart stuff this week, because again, we're looking for some bigger picture outlooks. This is a weekend video. Some of you guys don't have time to kind of see this until a couple days later. So the longer the time frame, I guess the more value the video brings. But we were talking about this during the week in a live room, and let's pay attention to what the market has recently done. And what the market has recently done has put in what we call a 3-bar reversal, right? So we have 2 very high momentum moves to the upside, right? With the second move being, you know, having less momentum than the first one. And what stood out to me initially about this move is the wick. Now, I would love this even more if we came up to the really extremes of our previous highs right here. We didn't, and you know, that's being picky to want the perfect move. The market very rarely gives you the perfect move. But the point was that we came up, we probed that level, and we did see some selling pressure up in that zone. We then followed it up the next week with the same type of thing. The buyers were able to push a little bit higher, but reject it even further down than before. We followed it up with one more test, right? This time the buyers weren't able to push as high. The sellers pushed them down even further, putting in a lower low, lower close for the week. And this is something that we call a 3-bar reversal. It's one of my favorite reversal techniques and one of my favorite entry techniques for that matter in the market. So what I'm looking at this week, for this week to come, is a continued move to the downside. And there's going to be 2 levels that we can look for. One is going to be your very conservative level. It's going to be this zone right here. So you can see we're sitting right on top of that. But keep in mind, this is a weekly. We closed the week at about 111.74s. Even the top of this zone is about 111.55s. But if you think there's a little bit of, you know, if you're looking for a little bit of a retracement, we're going to find my tool, a little bit of a retracement here, that's going to bring you up a few more pips. So there's going to be a lot more meat on the bone there. Also, you want to do a good job of really specifying this zone as we go down to the lower time frame. So what we're doing right here is drawing out a very broad zone of kind of the first danger point and the last danger point. When you go down to your lower time frames, whether it's your daily, whether it's your 4-hour, that's when you want to go into more detail and really specify where within that zone do I think price is likely to go to. So this would be zone number 1. Zone number 2 would be this inside level right here, and this is going to be much further away. Again, it's going to be about 110. So we're at 111.70s right now. This is going to be about 110 even. So obviously a lot more room going down to that level. So if you're on the euro dollar this week, right, there is room to move, right? Look for a bearish type of trade. Be on the lookout for some type of bullish type of relief, bullish type of retracement first, and that's just going to open up more opportunity to trade this thing to the bearish side. Now, the next pair we're going to take a look at is going to be the pound dollar. This was actually a trading idea that was brought to me by one of our traders on the platform. It's not one that I'm all too interested in, but for you guys that trade CTS style, combined technical scores, where you're taking different elements of the markets or taking different techniques of analysis in the market and combining them to really quantify your trading decision, this is going to be a good example of a counter trend trade. And I'll show you what I mean. So the pound has had a rough week, a rough end to the week for the pound, and we've seen it nosedive. And if there's one thing I've learned about the market is that nothing goes up forever, nothing goes down forever. Price tends to ebb and flow, meaning there is instead of just shooting straight down, right, to whatever its final destination, price will go down or go up a little bit, take a breath, and then go down again. And that just has to do with the profit taking and the lack, the selling interest and lack thereof at certain levels before they reload. But that's typically how a market moves. So as a counter trend trader, what you'd be looking at in this trade is an area of relief. Where is the market going to take a breather? Where is it going to offer me a little bit of an opportunity to maybe get a counter trend move to the upside? And then, of course, you want to do your job as a counter trend trader of not being too greedy and trying to play for the big reversal and get out before there's danger. But if you look at where we're sitting at right now, we're sitting at a very interesting level, right? One, this was previous level of consolidation that broke out to the upside, right? You see the market basically rallied up to previous structure or to create structure, a little bit of structure looking left. And then we retraced off of that. We hit that level again. We basically consolidated with a neutral candle right here. And then we broke up to the upside and kind of went for, 300 pips or so after that. And we're coming down right to that level once again. So that's going to be one thing. I'll draw a straight line in there for that level of structure. Two things, if we take a Fibonacci retracement and we drag out from our swing low to the swing high of this move, you're going to see we're also sitting at a 618 Fibonacci retracement as well. Lastly, if we want to go in and look at kind of the most recent move and break it down into two parts, what we have is an AB equals CD pattern. We have our swing high to swing low right here being our A to B. We have a little bit of a retracement right here being our B to C. And if I copy and paste this bad boy, or copy and clone it here on TradingView, we're going to have an equal measured move right at structure. I guess I should bring in a Fibonacci extension too. I don't think we have one. Looks a little bit shy of a 127, but you never know. Actually, look at that. Ooh, right on a 127 extension as well. So some more Fibonacci confluence. So if you were a CTS trader, you're going to look at this as minor structure, not major structure, right? This is not an outside move. This is going to be minor structure, which would give you 1 point. AB equals CD, which would give you another 2 points. Fibonacci confluence, which would give you 3 points, right? So you're sitting on a CTS of 3 right now. Now, as you go down to your lower time frame, this is where you would look to build the rest of your score, where you're looking for whatever you need in your specific entry technique. Would you need a double bottom? Would you need a 3-bar reversal? Does the RSI have to do, something? That's going to be the rest of you building out your CTS score. But the point is the level is pretty decent. Now, the problem that I have with this is it's going to be very hard for me to predict, or not hard for me to predict where price is likely to go, but I just don't think there's a lot of opportunity for price to go. So if I'm looking for targets in a situation like this, I just can't look further than this previous little consolidative level right here. So that means if I'm going to involve myself in a trade right here, right, it's going to be very hard for me to get involved because my targets are going to be like that. My stops are going to have to be underneath this level somewhere. So, it's, again, we're not going to know it until that entry reason actually happens. But if you're assuming we get a higher high, higher close, that entry looks more like this, right? That stop looks that. It's probably going to be hard to get a one-to-one risk reward in this scenario. So that's a personal reason for me on why I don't think I'll be able to take advantage of it. But if this is something that does fit your trading plan, maybe you can go down to a lower time frame, an hourly, or maybe you're more of an intraday or day trader. There could be an opportunity to look for a bump back up to basically the 124 even handle. Right now we're trading at 123.45s. I would say as long as we stay above 123 evens, right? Because these things don't have to be exact, but as long as we stay above 123 evens, that's a decent opportunity to look for a move up. And I'll tell you what, if we do retrace to that level, if we do get an entry signal right there, assuming we don't chop on the way down there, then this may switch from a trading opportunity that I have zero interest in to a trading opportunity that all of a sudden becomes pretty interesting now that I can get a quality risk reward out of it. All right, next up is going to be the euro pound. I call this the molasses pair because it typically moves pretty slow, although this year it's been pretty quality. And I guess I should say this, just because it moves slow, it does give very quality moves in my opinion, especially if you're a trader that trades more of the consolidative style, as you can see kind of the personality of this market. But it takes its time. It takes its good old time to complete. And what's interesting here, I'm on the weekly once again for the daily, for the higher time frame analysis, is if we look at what price action has done, right? We've rallied up, we've kind of put in a nice hold right here. You could call them tweezer tops, maybe not technical by the definition because the wicks aren't equal, but we know how definitions go in trading. They're very, very loose. So honestly, it doesn't really matter what you want to refer to something as long as you know the story behind it. And essentially, this means that buyers pushed up, sellers rejected. Buyers pushed up, sellers rejected, lower low, lower close. And we got a little bit of follow through on here. We came about halfway down before we started making our way back up. And it would not surprise me if we came back to test this level again. And again, I'm aiming for the low of these levels because I'm very conservative. I think it's a little bit too ambitious to shoot for the highs up here. Again, personal preference. I'm just a conservative trader. It's my nature, which is funny because when I first started trading, I was extremely aggressive and I was blowing money really, really quickly. So things kind of took a drastic change for me. But a few things we could look at here if we want to kind of pinpoint this area. Or, let me just say this. So what I'm predicting here is that if we can get a higher high, higher close for the week, and we didn't get that, that would have been a great move. If we can get a higher high, higher close above this 90.75 level, then we're more likely, I think we're likely to continue up towards this 92 even handle. And going down to the daily chart, it'll give us a little bit of a clearer perspective of what I mean. So if we do a few things, right, we can kind of pinpoint this level. We can take a Fibonacci retracement once again from our swing high to our swing low. Boom, you're going to see we have a 618 right up there below 92s. We can take a Fibonacci extension from our swing low to our swing high, this last move right here. And you can see that we're going to have a 127 right up at that level as well. So a little bit below 92s, maybe about 91.60s. The point is what we've done now, or what we've done this past week, is we've come up here and we've just slowly started consolidating sideways with during the later of the week, that consolidation getting higher and higher, kind of consolidating towards the tops. And this is something that I look at to kind of predict which way we are going to break out in. And the fact that we were able to close near the highs, the fact that the lows were getting higher towards the end of the week, makes me pretty optimistic that we're going to see a break to the upside. Now, again, when I say pretty optimistic, that just is for predictions. It doesn't mean that I'm going to put a stop order. I'm not going to do an at market order on Sunday open and buy it up. No, we still want to look for confirmation. But it makes me pretty optimistic in predicting that we're more likely to continue up versus down. So this is something to pay attention to. This is probably going to be more of a lower time frame type of setup where, you look at this intraday during the week. Ew, nasty. There you go. Look at this intraday during the week, and you wait for something like this. You wait for a violation. You wait for that retest, and that will open up some profit, some room for profit up to that level. But certainly look for a move up to that level right below 92 cent here on the euro pound. We're trading at 90.80s right now, really 90.45s. So although it doesn't look like much on a price chart, there's plenty of room here, especially for an intraday trader, to find a profitable or profitable plural trades. All right, next up, oil, my favorite investment of the year, right? If you guys have been following us all the way back since, what was the last webinar we did back in April? Gosh, was that Ascension? I think it was our Ascension webinar back in April. We did actually some live analysis of oil. So you guys that have been with us since then, you kind of know our views on it. You kind of know what we were looking at, and it's followed through pretty well. And what's cool is there is more to come. By the way, there may be another webinar workshop coming up soon, possibly, maybe. I wish I had a date for you, but I don't. But just stay in the loop. So that's a good time to kind of mention. If you're not subscribed already, make sure you subscribe to the channel. Make sure that notification bell is hit. That way you don't miss the next video update. And whenever we have a date on that next webinar, or that next 4-day workshop, I should say, I will let you guys know. But you don't want to miss it. And I say that because every time we get people that come in late and they're like, oh, I didn't know there was a workshop last week. And I'm like, you got to pay attention. But anyway, what we're looking here on for oil, I'll go down to the daily and make this less confusing. I'll get these big arrows out of here, but it's pretty simple, right? If you follow my trading philosophy, it's very, 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 very simple, right? I'm a structure trader, right? So we violate this area structure. We had to adjust our highs a little bit because of what price action was doing. But what we're looking for here is we're looking for a higher high, higher close. And once we got that higher high, higher close, once we identified that higher high, higher close, it allowed us to predict which way the market was likely to go next. And that prediction is going to be to the upside. Bullish. The next part of that prediction is if we're likely to go bullish, where are we likely to go bullish to? And the area in which I have on my radar is going to be this area right in here. So again, doesn't matter how you want to take this. You can do a buy stop. You can do whatever fits your fancy, right? The fact is that I think we're going to continue up to about 43.40s at a minimum. We're trading at about 37.35s right now. Or I'm sorry about that, we're trading about 37.90s, excuse me. So there's plenty of opportunities to look for longs, look for longs, look for longs here on oil. Next up is going to be the dollar index. This is not something that I personally look at, but it's something that you guys request every once in a while here. We're not going to get into a whole thing about the value of the dollar index and using it to, I guess, base your opinion off of other pairs and trades. I think it's stupid. I'll leave it at that. You can go search the podcast archives for my opinion on correlations. But what we have here is very similar to the euro dollar. Wink, wink. The dollar index is basically the euro dollar. If you do any homework on it, you'll see that. But we have that 3-bar reversal, right? Boom, boom, higher high, higher close. I should say it's like the euro dollar, but inverted. So more like the dollar Swiss. So what I would predict here, again, same things we've done to euro dollar, right? Continued movement up. Where are we likely to continue moving up to? Our next level right in here. So if you're an intraday trader on the dollar index, you should be looking for longs, looking for longs, looking for longs, and looking for longs up into this previous level of structure right here, essentially starting at about 98.23s. Let me just see, maybe we'll do some more fib magic on here, see if there's any Fibonacci's in that level. There's a 50%, not technically a fib level, but a psychological number right at 98.16. So not a bad level to look for. Fact of the matter is, again, you're looking for longs here on the dollar index, whether you're on the daily, whether you go down to the 4-hour, look for longs, look for a chance to trade this higher up until that inside level of structure. So next, let's go and revisit our good friend, the Aussie Yen. If you remember a few weeks ago, or maybe last week actually, Aussie Yen, we were talking about a structure play, a counter trend trading situation as we ran into previous structure. If I remember correctly, should be a rising channel on the 4-hour. Oh, yep, yes there is. Right up here. excuse me, gotta look back. Right up here was our rising channel, right into that structure. Very nice rollover off of it. Now, let's zoom out a lot, all the way out to the weekly, and let's gain some perspective on what the Aussie Yen has done, right? So recently, I think it's pretty obviously we have been in a bearish trend. I think 100 out of 100 traders can agree with this, whether you're using the actual tactics on how we, at least how we teach at Tier 1 trading, how to read a market with the new structure low, outside return, or initial structure low, outside return, new structure low principles. Or if you're just, maybe you attended a webinar and you just look at the very basics of reading a price chart where we talk about going from the upper left-hand corner of the screen to the lower right-hand corner of the screen. Speaking of which, really, really quick, if you guys haven't seen a webinar and you're looking for a video that just really basically demonstrates how to read a price chart, I have one here on YouTube. I just need to find it for you. It is going to be Learn to Trade the Market, Special Events. It's got to be somewhere in here. Try this one. How to consistently read a price chart recorded live. Let's see if that's it. It should be about a 30-minute video or something. Let's just see. Give me a second. Ads, ads, ads. Skip it, skip it, skip it. Yeah, so about a 45-minute video right here called How to Consistently Read a Price Chart. Check that out if you are new to technical analysis, I guess, or just new to trying to learn how to read a price chart. It's an awesome video. You're welcome. But what we have here is we haven't come to the end yet, but we may be coming to the end of this bearish move, and a few things tell us that. One, we've reached some pretty solid extremes down here. We saw a pretty big rejection, and we're following that up with a very deep retracement. If you guys remember what we talked about in last week's video, right? The deeper the retracement, the weaker the trend, right? We were also setting up, we're about 2/3 the way complete a head and shoulders pattern as well. So we may end up doing something like this, right? Left shoulder, neckline, head, retest of that neckline, a nice horizontal neckline. We may be putting in a right shoulder before reversing. And again, we may not, right? We're just making predictions here and putting ourselves in the best position to involve ourselves in the probable direction with the minimal amount of risk, right? That's all trading is, making solid predictions and managing your risk. If you do that over and over again without shooting yourself in the foot, you typically become better than at least half the traders out there. I would even argue to say even more than that. But what's interesting here, so, you know, let's kind of leave out the traditional way that we trade the head and shoulders. If you're looking for an aggressive way to trade the head and shoulders, here's something to ponder, right? We know that in most head and shoulders, at least most good head and shoulders patterns, you're going to see a symmetrical shoulder, right? So the left shoulder is right here. You're going to see a symmetrical right shoulder. It doesn't have to happen for it to be valid, but in your good-looking setups, that's what you're going to get. If we go down to our daily, and let's take a look at what we're doing right here. We're doing two things. One, we've come off that level of structure. We haven't quite done it yet, but we're putting in basically a consolidation pattern here, right? You can call it, it's not quite a descending triangle yet. That's what I wanted to kind of lean towards, but technically it's not. But you can look at this as a wedge pattern. You can look at it as a pennant pattern because it comes off of a bearish move. Either way you look at it, this is a potential breakout pattern, right? After contraction leads to expansion. So expect a breakout from this level, and just based on the fact that we held structure, based on the fact that the previous move was lower, based on the fact that it seems like we're getting closer to testing the lows while the highs are getting lower, it would not surprise me if we broke out to the downside. Now, if we do break out to the downside, and I shouldn't have erased all that, check this out. Again, if we just copy and paste this move here and we do a 1-to-1 measured move, that's going to line up right at the level we were looking at for that symmetrical shoulder, right? Here's that left shoulder over here, that symmetrical level, got a little inside structure in here. And again, this would be a level that I would pay attention to as well. A little bit hard to see, but this move right before the breakout. So if we can come to this level, this can offer a pretty good counter trend trading opportunity. In fact, it could be very similar to what we discussed on the pound dollar, yes, with the CTS trading opportunity. So if you're someone that's waiting for the head and shoulders, obviously you want to wait for the right shoulder to form and the retrace to the neckline, the violation of the neckline, and all that fun stuff to have a confirmed pattern. But I know we spoke about this in last week's video. If you're looking to be an aggressive trader maybe aggressively trade it at the right shoulder, this could be an opportunity, or this could be a normal counter trend trading opportunity for you. And then maybe you just keep a partial position on because it happens to be the right shoulder of a Head and Shoulders on the higher time frame as well. So keep an eye out on this. And of course, you can trade the lower time frame. You can trade the breakout as well. You know, we're not going to talk about everything in these videos, or if that's the case, we'll be running 2.5-hour sessions like in our live room every day. But that's another option as well for you guys to trade too, especially as you go down to the lower time frames and whatnot. All right, last but not least, this week we're gonna look at the Nasdaq. We looked at this about every day in the live trading room this week. We had a trader that was trading it. We've been talking a lot about some of the similarities and differences about trading currencies and trading stocks or indexes. And basically the main difference, I mean, the technicals are the same. Let's put it that way. Technicals are technicals. Price charts do three things. They go up, they go down, they go sideways. The same type of psychological patterns are gonna be present on any market, any time frame, right? And I say psychological patterns because understand that that's what they are, right? The what you see in front of you is a visual representation of human behavior, right? So the human behavior, right, which is human psychology, this is what causes these patterns. And you can say institutional traders, you can say retail traders don't have any pull in it. Yes, it's still all human behavior. Even if you're going as much as saying like, hey, everything's automated and these bots are doing this and doing that. Guess who's programming the bots, right? Humans, right? They're programmed to look for certain things at certain levels. So it all is, right, a visual representation of the buying and selling that happens in the market. So the only difference, in my opinion, is like if you're going to be an investor versus a trader, how you approach it, because those two are completely different in my opinion. But what we're looking for here is we had just violated a previous high here, right? And we're looking for an opportunity to buy it up even more. Right now, we have these holds here, which isn't really a good time. We had an indecision candle here last week. We had a bullish candle this week, but it's not a strong bullish candle by any means. We certainly didn't test last week's previous highs, and we did close above, but again, it's not a candle that really gives me any type of information. Now, this is longer time frame. On a daily, right, we did see this right here, and this was a prediction that we had during the week. After we got this, say it with me, 3-bar reversal, and this higher high, higher close, we thought we would move up and test the highs, and that's exactly what we did. I guess not technically the highs, but the highest closes, and that's what I pay attention to, and we did. Now, I don't think you should necessarily be buying right now. I think the more conservative approach is to wait for a new high, right? Wait for some confirmation and then wait for a retest before looking to buy and continue your way up. But if you are looking for a buying opportunity, right? Because again, these videos just aren't about me sharing my opinion, what I would do, but it's kind of just giving you insight to different ways to handle it. If you are looking for a buying opportunity, what you want to do in this type of situation is put yourself in the most conservative, I guess the most, I don't want to say risk-free because there's always risk. You want to put yourself in a position where you have very low risk. And what that means is looking to buy as price action comes down to these previous levels. Now, this would be a very nice level if this thing wasn't here. This kind of sucks because that's gonna, that's gonna be the low water mark of kind of this slowly ascending price action pattern, whatever you want to call it. But I would say this: if you can find a buying opportunity somewhere in here, if we can hold this level, you're going to be able to set yourself up with a pretty decent risk reward. And I'll show you what that looks like in a little bit. I do think stops need to be underneath here. I would love to have them up here, but just in my experience, when you have these overlapping levels of structure, a lot of funky stuff happens where the market like wicks down here, stops you out, and then runs without you, and then you cry while some other trader that made money off of you runs to the bank with your with the money you lost, unfortunately. So I do think you need to have stops below that level to be safe, but you can still get a pretty decent risk reward just shooting for a retest of the highs. And then of course the real juice in this trade is looking for the extension and looking to ride that up. So that's kind of the main portion. So even if you're not, I have no problem with taking a conservative target, putting a little bit of money in the bank on this level. But if you have the opportunity, again, this is where you want to, if we retest the highs, then we start rolling these stops up. You start reducing that risk, put yourself in a risk-free opportunity, and then look to ride this thing like a trend trader. So again, not my personal preference, just because of my trading style, but if anyone is looking to get long, again, pay attention to how we open up the week. Pay attention to how price reacts at this level. If we can get a hold and a confirmation pattern within this level, I think it's an opportunity where you can take a shot. Again, I do think stops need to be below here just so you don't get caught up in any of the funny business. So that's it for this week, guys. I hope you guys enjoyed the video. Do me a favor if you did. The best thing you can do to support this is 1, hit that like button. Takes a second. 2, share this if you're on the social media. If you're on Twitter, give it a share on Twitter. If you're on Facebook, if you're on Instagram, just shout it out. That's helpful in us spreading the word. 3, leave me a comment. It could be a comment about something that I went over in the video. Maybe you have a question. It could be a comment just saying, hey, I loved it. It could be a comment saying, hey, I hated it. It could be a comment sharing your analysis as well. We've had that over the last couple weeks. Anything that's going to generate good discussion. Just do me a favor. If you do share that I loved it, if you do share that you hate it, just give me feedback, because that's how I continue to make these videos better and better each and every week for you guys. All right, Tier 1 members, I'll see you on the platform on Monday. We got a nice Q&A session lining up. Got some early questions already, so I'm actually going to be able to do some prep on it instead of kind of, creating something 5 minutes before like the last week. So that's good. And then for you guys on YouTube, I'll see you next week with another episode of the Weekend Trading Edge. Take care. Be safe. Go Everton.